What is going on, everybody? Hopefully you guys are doing well out there. On today's video, we're going to be talking about possible outcomes for Tesla stock next year. I'm going to give you 2025 revenue estimates based on some of the things that Elon Musk said in the conference call. We'll look also at kind of the trailing 12 months of their three different businesses. They got an automobile business, they've got an energy and kind of storage business, and then they have the parts and service and kind of software business as well. We'll take a look at what Elon Musk said on the conference call, and we'll apply that to some of the revenue that the company has seen over the past year, and we'll give you a 2025 revenue estimate on Tesla. Once we know Tesla's revenues, I think we can figure out different price targets. And I'm going to give you kind of a downside price target. This is a price target where if Tesla shares trade down into that range for whatever reason, as long as the rest of the company seems like it's on track, Tesla, as you know, very volatile stock, can go up or down for a number of different reasons. Well, those are areas where you're definitely going to want to step in and buy. Now, we'll also give you an upside price target. Just like Tesla can go down, it can also go up, sometimes irrationally from at least a valuation perspective. Those are areas where you could potentially take profits on Tesla, but at the very least, probably not going to step in there and buy at those prices. So where is Tesla today? Also, where is Tesla going to go in the future? We'll talk about that on today's show. Now, first thing we've got to talk about is what Elon Musk said on the conference call. And he really kind of, I think, stepped out on a limb here. People weren't expecting him to give maybe forward guidance like this. And he does this not just for Wall Street's benefit. In fact, I don't think he does it at all for Wall Street's benefit. He does this to motivate the managers and the employees over at the company. And he says, people are wondering what they should assume for vehicle sales growth next year. To make a bit of a risk here, and I think he is stepping out on a limb here because vehicle growth over the past year for Tesla hasn't been particularly good, but he said here, I do want to give some rough estimate, which I think it's 20 to 30% vehicle growth next year. And obviously when Tesla grows their vehicle growth revenues, that plays into the service and kind of the software, full self-driving software, the charging stations, the energy business as well. So Elon Musk kind of putting it out there, saying 20 to 30% growth over the next year. That's just vehicle sales growth. That's not the total company sales growth. We'll talk about that here more in a minute. But Wall Street estimates are for about 17% growth next year. That's kind of the midpoint at about $116.93 billion. We'll revisit this $116 billion revenue number here in a moment. But the high-end estimate over at Wall Street is currently sitting at about $143 billion. This is, man, everything has to go right for Tesla, and maybe even Ford and GM have to cease operations of some of their cars for that to be possible. And then you've got some bears for Tesla coming in at $95 billion. I think it'd be very difficult, actually, for Tesla to do that. Now, let's take what Elon Musk said and apply it to the previous 12 months Tesla has had for their automobile revenues. We go back to Q4 of last year and we come forward 4 quarters and we see over the past trailing 12 months, anytime you see on financial documents TTM, it means trailing 12 months. For the past trailing 12 months, the company has had $78.83 billion worth of revenue. So if you want to apply Elon Musk 20 to 30% vehicle growth, I think you apply it to this number and you'll get to $94.6 billion of vehicle sales. That would be 20% growth. 30% growth would take you up over $102 billion. Again, that's just the vehicle side of the business. Wall Street's estimating $116 billion. Now, the company has another business. Is this energy business. Now, when they say energy, they have a solar business where they're putting solar on roofs. They also have these power walls, which is a very popular product, not just from homeowners' perspective, but also governments, state governments, countries are installing these next to power plants to store energy. And there's also some businesses that have kind of started up where they're storing energy at a cheap price and then they release it into the grid. It's almost like an arbitrage spread. So the energy and storage business has generated roughly $8.5 billion worth of revenue. Now, here's interesting. in the energy business. Now, this also includes the charging stations. Tesla also obviously charges for that and earns a profit from that business. And so obviously, as the vehicle sales grow, and we're anticipating that next year, Elon Musk, in fact, 20 to 30%. So you will see inherently some growth in the energy business just based on that. Now, what you'll notice, though, over the past 2 quarters, the energy business has skyrocketed. The revenue is a little bit lumpy. It's based on the fact that you do have some state governments and other municipalities making large purchases, and those tend to come either when legislation is passed or the projects get completed. And so you have some lumpiness, but over the past 2 quarters, you've seen explosive growth here. 100% in Q2. Q3 was a solid 52% growth year over year. Now, they might have lapped some rather low sales numbers, and so we'll see as this company gets into next year. This is the wild card for Tesla. If they're able to maintain 30, 40, 50% revenue growth in the energy and storage business, well, obviously, they're going to come well towards the high end of the revenue estimates in the coming quarters. Now, if we want to apply just a 20 to 30% growth rate on the revenue of the energy business, that'll get you to about 10.2 to about $11 billion over the next 12 months for Tesla. Now, they also have the service business. Now, for a vehicle, you often think this might be the bumper or the mirrors and those types of service. Well, most Teslas on the road are probably under some kind of warranty. But the service business is also the software business, the full self-driving. Now, Tesla made a very wise decision over the past year. They used to sell the full self-driving software package when you purchased the car. They charged you something like $10,000, $15,000 for the software. Now, some people did pay this crazy price for the software, but nobody sells software these days. Everybody sells it on a monthly basis, and then Tesla very intelligently changed it to a monthly service fee, and I actually subscribe to it. So it's $99 a month, and it's per vehicle. So if you have more than one Tesla, you actually have to buy more than one full self-driving package, but it's $99 and you get full self-driving basically on the car right away, and it definitely comes in handy. And it's something that maybe if you're doing a lot of driving one month, you can kind of turn it on, you can turn it off, but it captures more revenue than Tesla would have seen, I think, in the past. And you see the service business very consistent, kind of low to mid 20s, maybe even a high 20% growth rate. So I think we can comfortably say the service business, which over the past trailing 12 months is almost exactly a $10 billion business. I think it's very comfortable to say, particularly if Tesla nails kind of the 20% growth rate on their vehicle sales, I think we can comfortably say the service business is also going to grow 20 to 30% over the next year. That'll move it into a $12 to $13 billion business. So we've got the 3 different business lines for Tesla. We add those up. We add the automobile, the energy, and the service business. And on the low end, a 20% growth rate for Tesla over the next year will bring you to $116.8 billion of revenue. Now, on the high end, if they grow 30%, maybe more, give or take some of the energy business, some of the vehicle sales, you'll get up over $126 billion worth of revenue. Now, I told you to make note earlier. I told you Wall Street's midpoint estimate for 2025 for Tesla was right at 116.93 billion. And I show you on the low end, if the company is to grow all of its business units by about 20% over the next year, they will hit exactly $116 billion worth of revenue. So Tesla, that is kind of the low end and really the bar that Tesla needs to cross. That is all of its vehicle sales, its energy, and its service business needs to achieve about 20% growth from a revenue perspective, and it will meet the expectations for Wall Street. So there's your upside with Tesla. Obviously, anything higher than 20%, certainly if they can expand profits and those types of things, that will benefit the stock over the next year. Now, what we have to do with Tesla is we have to analyze this from a price to sales basis, because that's what we've just analyzed. I think we've accurately predicted within a certain reason of predictability where Tesla's revenues are going to fall over the next year. And so we apply the price to sales multiple that Tesla has been trading at, not just for the past year, but really the past 2 years or so. Tesla has peaked at about 9 times sales, meaning investors are willing to pay about 9 times forward sales for the company when it comes to a share price. And it tends to bottom at about 5 to 6 times sales. So there's our range with Tesla. Now that we know within a reasonable degree of accuracy what the revenue in 2025 with Tesla is going to be, based on what Elon Musk said on the conference call, based on what Wall Street is projecting, based on what the growth rate of the 3 different business units have been over the past trailing 12 months, and applying a 20 to 30% growth rate, applying the multiple that Wall Street tends to want to pay for Tesla. Well, here are our price range that you can potentially buy and maybe even sell or take profits on Tesla. With a price to sales of 5, which is relatively low. In fact, Tesla spends just a short period of time when it gets down to a 5 price to sales multiple. So you could probably add, a couple of points to all of these prices. So 5x price to sales. On the low end, it would take you down to about $189 per share on Tesla. On the high end, take you up to about $197, maybe close to $200 per share on Tesla. That's a range, and I'll show it to you also graphically here in a second. That's a range I'd be very comfortable accumulating or acquiring Tesla shares based on their current business. Now, if things start getting nutty with Tesla, investors are particularly bullish, maybe not only just on Tesla, but the entire stock market, and Tesla shares start to take off, which it's been kind of known to do. Well, you'll start trading up close to a 7, 8, 9 times price to sales, and that is likely where Tesla will meet some resistance, at least from bringing in new incremental buyers. That would take you up into the 313, upwards of $353 per share on Tesla. That would be an area where I wouldn't be particularly interested in Tesla. So to summarize, I would be very interested in buying shares of Tesla between, we'll call it $190 and $200 per share. And I would not be interested. In fact, I might even take profits on some of those shares upwards of $313 and higher on Tesla shares. Now, graphically, I will update these all. If you watch our FANG Stock Recap show over on the Investor channel, I'll update all of our charts. I plan to do these videos for the other mega cap tech companies. And maybe down below, you have a company that you'd like me to apply this type of model to. You can leave suggestions down below, and maybe we'll post them here on the video. The green box with Tesla, anything south of 193, we are a buyer. Anything north of 313, as indicated here, we'd actually be a seller. Currently, we are actually approaching that red line. I would expect overhead resistance for Tesla when it hits this 310, 313 level. And that's where you might get pullbacks and create buying opportunities. Folks, that was our price targets for Tesla. In short, we're buying between 190 and 200, and we're selling anywhere over $313 per share. Hopefully you enjoyed today's video. We'll be back again very soon. Good luck with your investments.